Well, our next speaker here, as we're getting underway in more earnest here, Saturday morning, is my friend Abe Drost. He is the CEO of Clean Air Metals. Abe, welcome.
Thanks so much, Chris. Great to be here virtually.
Well, I'm going to let you get right into this, folks. Clean Air Metals is, of course, as many of you already know, a recommendation of mine and a national investor. It's one of the more compelling values, in my opinion, of an exploration company in a first world jurisdiction that's got a great resource already. It's going to get greater, I think. And platinum group metals, the whole ball of wax, and not too far from the border of the US. So Abe, tell us about the project and about the company.
Absolutely. Well, this is a critical mineral suite, Chris, and it features platinum, palladium, copper, nickel. And it's a story that's relatively new. Clean Air Metals started trading in May of 2020, so less than 2 years old in its new iteration. And it was formed around the consolidation of two precious metal assets. I say precious metals because it's got platinum, palladium, copper, nickel, but very promising critical mineral assets that are really getting a lot of attention here in Canada, provincially and federally, as governments seek to stimulate production there. Our predecessors were Rio Tinto and Panoramic Resources of Australia, and we were able to buy the project for $15 million in 2020. And on January the 12th of this year, 2022, we published a preliminary economic assessment with a $425 million NPV5 and a internal rate of return IRR of 31%. That's incredible value add over that 2-year period. And we're now looking to take the project into feasibility. My colleague, Jim Gallagher, mining engineer, sends his regrets today. Jim was most recently the CEO at North American Palladium, a local operation that's Canada's largest palladium producer. I'll show a map of that shortly. My background as a geologist is exploration. So we have a nice orthogonal skill set here with Jim as a builder, myself as an explorer and a finder, and we've been able to add significant value at Thunder Bay North, the name of the project. It's located here in northwestern Ontario, as Chris said, just north of the Minnesota border, and it's about almost 500,000 acres of land that protects two deposits: the escape deposit from Rio Tinto and the current deposit from Panoramic Resources. Just up the road in the northwest quadrant of the inset map, you can see the Lac des Îles mine. That's a 14,000 ton a day processor producing about 250,000 ounces of palladium per year at this time. What's notable about the Thunder Bay North project of Clean Air Metals is its proximity to the city of Thunder Bay, where I'm actually calling in from today. And Thunder Bay is a mining town, mining and forestry, actually, a resource town, but it supplies and services 7 operating mines in northwestern Ontario today, including Lac des Îles. Now, the dashed blue line on the right-hand side of the claim group is a high voltage power line, and we intend to hook up to that. It's only 4 miles away from the actual project site. And the beauty of that is 2 of our First Nation partners actually are co-owners of that particular power line. So we've got a bit of an in there. And the black line you see there is a paved provincial highway servicing the west end of the property. So infrastructure, and as you'll see, grade, and certainly lowest capital intensity in the peer group make Thunder Bay North and these 2 projects a winner. And they're quite unique geologically. You'll see here that these are what we call magma conduits, and they host the mineralization. We're looking at upwards of a 3.5 million ounce platinum equivalent project between the 2 assets. And the preliminary economic assessment that I mentioned envisions development in both of these assets to go after that mineralization. This would be ramp access underground development. Now, the PEA, the highlights of the PEA that we put out in January, very robust. This is a 10-year life of mine, and that's 3,600 tons a day through the mill. And we're talking about as I said, an initial NPV5 that's a net asset value for the asset, for the production profile of 425 million Canadian, with an IRR of 31%. If you apply the 10% mining tax in Ontario and a 26% combined federal and provincial corporate tax, that NPV or NAV goes down to 293 million Canadian, with an IRR of 25%. But I will make note of the new critical mineral strategy here in Canada that will likely give a tax holiday on the mining tax in Ontario. So 10% will likely be out of the picture at the development of this project, and that will take NAVs well into the 300 million range, probably somewhat equivalent with initial capital, even on a post-tax basis. So we feel pretty good about that. And the next slide then is the production profile. You see a very strong, these are now US dollars, 250 million revenue US in the first 3 years, dropping off a bit in years 4 to 7, and then rather precipitously in 8, 9, and 10. The average all-in sustaining cost on a platinum equivalent basis is roughly in the sort of, the $500 range for the first 7 years of mining, and increases dramatically at the end of this particular graphic. I want to make a note here that years 8, 9, and 10 will probably be pushed back to years 10, 11, and 12 based on the new material that we have that was drilled in 2021 after the resource was published on which this mine plan was based. So we've already got probably an extra 2 years of material to add to this particular mine plan, but that will be brought in through the feasibility process. So as Chris said, it's early days, and this project will grow from here. And this is a great slide because it shows the six payables effectively: copper, nickel, platinum, palladium, silver, and gold, that contribute to this revenue profile. Very strong revenues here in the early going. I should mention as well, on an EBITDA basis, that 7-year EBITDA profile, very strong in sort of the 100 to 150 million range. Free cash flows, sort of 50 to 150 million in that first 7 years. But again, a pretty good start for something that we paid 15 million for in 2020. And the point is this, is that I agree with Chris, is that there's a ton of upside here on this critical mineral project. And here we have the 3D Verify presentation link. And what you see here is the site plan. And I'll invite the viewers or the audience here today to do their own due diligence on this. With the time that we have, I won't go into the 3D slide set, but on our website at cleanairmetals.ca, right on the homepage, you can actually click here, as it says, and you can actually spin the model around. You can remove the surface layer and actually see the deposits, which is what I'll show you on the subsequent slide. Here we have it, the development profile of the current deposit. The red areas are areas of a long hole open stoping, which is underground bulk mining. The blue are cut and fill, which is a more of a sort of, what shall we say, a lower intensity form of production. But what's notable here is even at the PEA level, the indicated mineral resource lent itself to mining shape optimizer, which is normally reserved for the pre-feasibility level of study. So even at this level, the continuity of these deposits was very, very favorable. And the same with the sister deposit to the west, about, well, it's roughly a mile away. A second portal, underground access to what we call the Escape South High Grade Zone. This particular shoot, I suppose, in the deposit is extremely rich and is proposed to come in and provide feed on a balanced basis, sort of blended feed at about year 4.5. All this infrastructure would be built from cash flows, and that's already accounted for in the economics that you saw. So it's a pretty elegant mine plan building up here. Here we have a plan view of the two assets. the current deposit on the left and the escape deposit on the right. I want to just remind folks that in 2021 we completely drilled off the escape deposit, and that material is not yet in the mine plan. So stay tuned for that. We did significant metallurgy at Thunder Bay North under the auspices of Blue Coast Research of Victoria, BC. And we were able to develop a clean copper concentrate with a copper recoveries of about 95%, and then a bulk concentrate containing our nickel and the bulk of our PGEs. And we were able to achieve what here says 52% nickel. Well, that's total nickel. We actually got 90% sulfide nickel recovery. Platinum recoveries were over 80%. Palladium recoveries were over 85%. Now that's significant because our predecessors were only able to get up to the mid 70s on platinum and palladium. And so we are actually able to break through another sort of value add that this management team has brought to the table and has contributed to these robust economics. So our plan is also to bring rhodium and cobalt into the mix. They were not the focus. They are minority byproduct elements, but they are present. And ultimately, we feel in the first 7 years, we'll be shipping and hopefully getting paid for 1,000 ounces of rhodium a year, and quite significant cobalt as well. So that'll be the next phase of metallurgy, which will be a future press release announcing the successful contractor to do that third phase of metallurgy. Quite a simple milling process, essentially crush, grind, flotation, and then two concentrate streams, the clean copper con and the bulk con, load out facilities, truck to Sudbury smelters, which is where the famous nickel smelters in Sudbury. The copper smelter will go to Rouyn-Noranda in Quebec, and basically, we've had quotes from some of the big three smelter operators here in Canada, and these are incorporated into the economics. And then tailings will be filter pressed and dry stacked, so to avoid any environmental implications. In terms of technical path forward, it's all about optimization of metallurgy, adding material to the mine plan, effectively tightening up contractor quotations, and bringing the permitting along to the point where the board can make a construction decision estimated in between, well, roughly 2.5 years from today. And it sounds like a long time, but here's the thing, folks, we just lived through COVID, and that's been 2.5 years as well. So glad that's over, but this time we'll go quickly. I want to just emphasize here the clean energy revolution. That's what Clean Air Metals is all about. Many of you likely drive battery electric vehicles. They're awesome. A friend of mine just bought a new Tesla, and we spent last weekend in his garage oohing and aahing over his brand new Tesla, and it was very cool. But here's the thing, battery electric is not the only solution. In fact, for heavy haulage, buses, effectively trains, planes, and transport trucks, you can't run these things with battery electric because the batteries are too heavy. They take up your entire payload. So there are other solutions are, of course, hybrid electric, and in this case, hydrogen hybrid electrics are carbon free. Another way of doing it, you can generate hydrogen in a green manner by cracking water to develop hydrogen and oxygen. You can also combine hydrogen and oxygen in a fuel cell to form water and release an electron that goes to a battery. That's the whole concept here. CP Rail of Canada, big rail operator in the US as well, has just converted 3 diesel locomotives to hydrogen fuel cells, and they're working on more. Mine trucks are developing hydrogen fuel cell applications. Airbus Industries of France is developing hydrogen fuel cells for their large aircraft, and platinum and PGs are the key elements in the anode and cathode fuel cell membranes of hydrogen fuel cells. So we expect to see this technology scale up and spread out across the world through China and Asia. It's already big time in use in Korea. This is a hydrogen fuel cell fill-up station in Vancouver, BC. These vehicles are operating. This is proven technology and very exciting. We are ESG compliant. We have a strong partnership with our First Nations, 3 communities that we just announced. If you look into our news flow, you'll see that there. We are fully ESG reporting. We are committed to sustainable mining. And if we can help it, we will actually sell carbon credits here, because the end use of our metals is actually carbon reduction. We also superimpose here with a forest manager. I mentioned Thunder Bay is a forestry town. We are looking at replanting, co-funding replanting of cutover areas to further reduce our carbon footprint. We are, with diesel prices being the way they are now, we're also very much, that this is really, I think, confirmed our intention to move towards an all-electric mine, and that technology exists. So it's pretty exciting. It's a renewable power mix in Northwestern Ontario, wind, solar, hydroelectric. That's what you have here, and it's cheap. Okay, much cheaper than some of the crazy prices we're seeing in the world today. We did add Mr. Shannon Matatawaban to our board recently. Shannon is a full-blooded Cree individual and is also CEO of the National Aboriginal Capital Corporation, which funds worthy Aboriginal projects. Shannon is a capacity builder and will be a big help to us as we negotiate our impact and benefits agreement through feasibility. I want to emphasize as well that at the end of April, we have 8.5 million on hand, 222.6 million shares issued, and management owns about 5%. Some great names institutionally in the issuer as well. Sprott Asset Management in Toronto, Dynamic Precious Metal Funds in Toronto, Royal Bank Investment Management Precious Metals Fund in Toronto, Franklin Templeton out of San Diego. These are some of the the top holders in the issuer, and very, very supportive, participated in the last round of financing as well. So we're very, very appreciative of that. In terms of peer group, these are names that you will recognize, non-producing copper, nickel, PG assets, more or less ranked in by market cap. And as we can see, being less than 2 years old, Clean Air Metals is running about 60 million Canadian market cap. We started out at 20. We're showing some great growth. I think here it won't be long before we'll be over 100 million Canadian market cap here, and well on our way. A couple things that stand out at Thunder Bay North, and one is grade. We have the highest PGE grades of the entire peer group, and we also have the 3rd highest copper and nickel grades as well. But because it's such high grade, it's lower capital intensity. This is not a bulk tonnage operation. This is selective underground mining that, principally these zones are thick enough that we can do long hole open stoping, which is a bulk mining, a bulk underground mining method. But then the proximity to infrastructure, folks, and I know CEOs who are, their mantra is that with respect to mining projects, it's all about infrastructure, and you guessed it, infrastructure, right? You think of real estate, location, and location. Well, mining is all about infrastructure. So we're very pleased to be in the situation we're in. And just to introduce the board, very strong cash flow focused board. Mr. Dean Chambers, professional engineer, chair of the audit committee, formerly Brookfield's designate as independent director at North American Palladium before the sale to Impala Platinum of South Africa, who now operate the mine. Ms. Marianne Crichton, professional engineer, ESG specialist. She works for Hatch Engineers. And Ewan Downey, CEO of I-80 Gold, a Nevada-based gold producer. And in addition to Jim and myself, Mr. Shannon Matatawaban, as I mentioned. So pretty exciting investment highlights here. Strong project. It will grow. It will get optimized, and we believe that this will be a very, very nice little cash flowing engine in due course here. And the stock is been under some pressure with these latest markets, but we believe that effectively the stock turned over in 2021 and is very attractively priced at this time. And so it represents, we believe, a real strong value opportunity. Just a little bit about exploration. We use the Norilsk exploration model. Russia is sort of on the rogues list today, but geologically speaking, quite similar to the Talnak deposit at Norilsk. We have two conduits and a structure linking the two conduits. At Talnak, they have a single conduit, large conduit, linked by a single structure with massive sulfides. And I will point out that we have massive sulfides as well. We're just looking for that big onion. We know it's there because we've drilled various high-grade intercepts, such as this one, 1.5 ounce platinum, ounce palladium, and 15% copper per ton over 2.5 meters. Not material yet, but an exploration indicator. And then more recently, we drilled, an intersection in the Escape deposit, which, as you can see from the grade profile here, it is similar to Norilsk head grades. So that kind of completes the picture for us. And we do have some very significant anomalies here on slide 29 that we will be drill testing. We believe some of these, if not all, may represent massive sulfide deposits between 1 and 5 million tons. If we hit one of these, never mind a $400 million project, this will be a $4 billion project. And that's a kind of upside potential that exists here in this day and age. So thank you very much for your kind attention. Very much appreciated.
Well, great story, Abe, and it's why your company's a recommendation of mine and a national investor. I can tell you, with a $50 or $60 million market cap recently, and with the kind of numbers you've already got, let alone the scenario for numerous ways that you're likely to expand this resource, perhaps considerably over time, it's a no-brainer. And as we're going to be talking about during a conference later today with a green panel, a critical metals panel, yesterday's discussions on some of these same subjects, this kind of a premier asset, high grade, best jurisdiction available just about, and with really more support for you guys from the Canadian government than what we have, unfortunately, here right now so far in the US. I mean, you check all the boxes. So, Abe, we're going to invite some questions here after you're off, and those that come along that I can't answer on your behalf, I'll do my best. I'm going to pass on to you later, and we'll make sure that each and every one of them is answered. So thanks for joining us today. Wish you could have been here in person, but we'll try that next time.
Yeah, well, thanks for the opportunity, Chris. It's a great pleasure to speak again, and we'll speak soon.
Take care.
Take care.